The commercial real estate industry is facing a perfect storm of challenges that threaten to reshape the landscape for years to come. From the rise of private lenders to the exodus of tech giants, the sector is grappling with unprecedented change. In this video, we'll explore 4 key themes that are driving the transformation and what it means for the future of real estate. As banks pull back from commercial real estate lending amid concerns over the sector's health, private lenders are stepping in to fill the void. According to CBRE, alternative lenders were responsible for a staggering 47.2% of non-agency loan closings in the first quarter of 2024, while banks accounted for just 23%. The influx of private capital is being driven by the so-called wall of maturities in the commercial property market. According to MSCI, with nearly $1 trillion in debt backed by commercial properties set to mature this year, borrowers are turning to alternative lenders to refinance their loans. But while private lenders may provide a lifeline for some borrowers, their emergence raises questions about the long-term stability of the market. Will these lenders be able to weather a downturn? And what does their growing influence mean for the future of commercial real estate finance? Amid the shift to private lending, one unlikely player has emerged as a dominant force in the construction lending market, Bank OZK. The Little Rock, Arkansas-based bank handed out more than $7 billion in real estate construction loans in 2023, more than any other lender in the country, according to MSCI. Bank OZK's success is due in part to its rigorous lending standards and commitment to the construction lending space, regardless of economic conditions. The bank keeps its loan-to-cost ratios at or below 50% and only works with developers that have a strong track record and access to their own equity. But as other lenders pull back from the market, Bank OZK is doubling down. The bank expects its real estate group's loan origination volume to be in line with the $7.2 billion it doled out in 2023. With construction lending seen as one of the riskiest areas of commercial real estate, Bank OZK's aggressive approach raises questions about whether it can continue to defy gravity in the face of economic headwinds. Next, we discuss the exodus of tech giants. The commercial real estate market is currently struggling with the exodus of tech giants from once thriving submarkets. In Playa Vista, a seaside area of Los Angeles often referred to as Silicon Beach, office availability rates have skyrocketed to as high as 37.4% in the first quarter of 2024, according to Savills. This rise in vacancies is partly driven by layoffs at major tech firms like Meta, which put nearly 136,000 square feet of office space up for sublease in Playa Vista in the first quarter of 2024. With tech companies reevaluating their office needs post-pandemic, a critical question looms: who will fill the void left by their departure? Perhaps nowhere is the distress in the commercial real estate market more evident than in the office sector. In April, nearly $1.8 billion worth of office loans became newly delinquent, according to TREP, with just 6 buildings accounting for 80% of that total. One of the largest distressed office loans in the country, a $1.7 billion loan tied to 7 buildings owned by Columbia Property Trust, recently received a 2-year extension from its lenders. However, the deal came at a steep price. The portfolio's value was slashed from $2.3 billion to just $1.6 billion as part of the extension. With remote work impacting office demand and property values, 2 pressing questions remain. How much more pain is in store for the sector? And what will it take to bring tenants back to the office? As we've observed, the commercial real estate market is facing a myriad of challenges that are testing the resilience of the sector. From the rise of private lenders to the exodus of tech giants and the distress in the office market, the industry is navigating uncharted territory. But while the road ahead may be rocky, there are also glimmers of hope. The emergence of new players like Bank OZK and the willingness of lenders to work with borrowers to find solutions suggest that the market may be more adaptable than some have feared. Ultimately, the fate of commercial real estate will depend on a variety of factors, from the pace of economic recovery to the evolution of work and lifestyle preferences. As investors and operators navigate this new landscape, one thing is clear: the old playbook no longer applies, and those who are able to adapt and innovate will be best positioned to succeed in the years ahead. If you are a sponsor or principal looking for an effective recapitalization strategy for your business or project, you can reach out to me via Gmail or X. My contact information is in the link in the video description. If you found this video informative and insightful, please show your support by liking and sharing it with your network. And don't forget to subscribe to my channel for more content on the latest trends and developments in commercial real estate and private credit. Thanks for watching, and I'll see you in the next video.